Hey guys, welcome back to the Independent Investor channel. It's so good to be with you. My name is Ryan. On this particular video, we're going to talk about the cautious approach to investing, and I felt really motivated to put some information out there quickly. I've been paying attention to a lot of information that shows up online, and everybody has got their own opinion about what's the best way to invest in the stock market. And what I've said on my trailer and what I've said in many of my videos, it's on this particular channel, we tend to take an extremely different approach. I know it's the glamorous way to put your stock picks out there for people to look at, but what is really important is to understand the impact of those recommendations. And what I mean is, if you're putting that information out there because it's the glorious thing to do, or it's going to get you 10,000 views on YouTube, I can tell you that that's not the motivation that we're looking for. And I've got a real heartfelt responsibility. If it just so happens to be that there's a lot of subscribers on my particular channel that are friends of mine, and I am about as intense and passionate about making sure that the information that I end up putting out there is factual, is useful. It's something that I've actually probably done and worked through in my particular past. And I would encourage everybody out there to really understand, if you're taking information from somebody that maybe has less than 10 years in the market, let's say post 2009, it's been really, really easy to be a participant in this particular bull market because we're on an 8-year bull run now. And quite frankly, anybody who's been participating in the market over the last 8 years has really been in a stock-friendly environment, okay? And what I want you guys to really understand is that all too often I see these individuals coming out and recommending their 4 stock picks, and really not understanding that if a beginning investor enters into those positions, they may not be taking a couple things into consideration, or the person that's receiving the information may not understand the tax implications of those positions, and really not understanding that we are really far removed of the last recession that we had in 2009. And this current market that we're in, we just hit another record high. And I hate to be the Debbie Downer to the party. I would love to just jump on a bandwagon and start recommending all kinds of stocks to you guys, because I know that's what a lot of viewers want to hear. And I found it extremely prudent to offer a little bit different approach and come out with a video to talk about a little more of a cautious approach to investing, all right? You just got to be careful if somebody's offering positions out there that are losing positions. You really need to kind of ground truth what it is they're saying. I've got a guy that I just began following. It's Chasing Money 101. He said a couple things on the last video that actually really struck me. Seems like a really genuine guy, and he mentioned a few things. He said, if you're looking to get rich, this channel's not for you. I really applaud that. And I also applaud, the sincerity of some folks that I follow online. And I would hope that if they were wrong about a certain position or a certain recommendation, that they would own up to it. And all too often I find that folks are just rushing out there to buy these recommendations that are being put out there online. And I would caution you to take a time out and take a step back and really understand that if you turn this stock recommendation into reality, then you've entered into a reality of tax implication and a reality that those stocks, all right, that are being recommended, yeah, they might be phenomenal recommendations for certain people, but they're not for everybody, all right? And it just takes a market correction of 20 or 30%. And I don't care how good your stock recommendation is, listen, guys, those stocks are going to adjust back as well. All right. Now, I've identified 3 things on the board here that to kind of help you understand the position that we tend to take on this show. The first one is the stock pick. All right. And again, I just want to highlight that everybody out there wants to give you their stock picks, and that's great. You know, if they give you a stock pick and it just so happens to fit into your particular portfolio, to enter into a position, let's say Google, I've seen floated. I've seen Amazon floated. I've owned all these stocks that are being recommended. Am I long those positions? It really just depends on the timing of the market. Right now, I'm not. I find that, all too often we want to throw out those stock picks, and we've got folks in our viewing audience that really deserve the respect and understanding that they're coming from a real beginner's perspective. And, how do you enter that position and protect gains going forward? All right. And, another thing that when these stock pickers are putting, the best stocks to buy in June, I understand it's probably the sexy thing to do. And I think it's what a lot of folks are looking for, is they're looking for the next best thing, And you have to understand and separate for yourself that stock picking is not passive investing, all right? And I'm not going to tell you that stock picking doesn't have its place, all right? But passive investing, all right, buying high quality stocks, ETFs, and perhaps an index fund to give yourself broad diversification is certainly going to be something that is going to protect you in the eventual event of a market downturn, all right? And I don't care what stock you own, guys, when the market goes down, all right, then those stocks are going to go with the broader market, all right? So the second thing is, a lot of people talked about investing in a manner to throw those stock picks out there, and a lot of people say, well, okay, what's the first thing I need to do? And they throw out the opportunity to go and start a brokerage account and start trading stock. Okay, you guys need to understand the short term and the long term tax implication. If you buy a stock and you hold it less than a year, all right, you're going to be taxed on the short-term tax bracket, all right? If you end up holding a stock greater than a year, then you're going to get hit with a long-term capital gains tax, all right? Now, that's trading in a brokerage account, all right? So for you new investors, all right, we all too often want to jump on the brokerage side of the house, and we want to start our E-Trade account, or we want to start our TradeStation account, or we want to start our account, and we want to start trading in an account, all right? Guys, I've been there and done that, all right? I speak from 24 years of experience in the market, and when I first started doing it, I did the same thing. I started a brokerage account, started buying and selling stock, and not really understanding that those each buy and each sell created a taxable event, right? Those brokerage houses, guys, they're gonna report you to the IRS, and they're gonna expect you to close the loop on each one of those trades, all right? And I'm not saying don't start a brokerage account, all right? And I think it gets misconstrued sometimes on the independent investor channel when I talk so highly about the self-managed Roth IRA account. And there's a reason for that, guys. If you're maxing out your self-directed or self-managed Roth IRA account every single month for $5,500 a year, and you can fund that account strategically with no problem, guys, I can endorse you starting that brokerage account and investing in an excess of your self-managed Roth IRA account, like I do, okay? I have a self-managed Roth IRA account. I'm married. I contribute $11,000 a year to it. I'm maxed out. There's nothing really more that I can do in that account. Therefore, I consider myself an eligible candidate to go ahead and start the brokerage account and start trading and making passive income in that particular account, all right? But I fully understand that those transactions are going to be taxed as income, all right? So very, very important to understand that most people trade in a reverse fashion. They want to start that brokerage account first. And again, on the Independent Investor channel, if you're not one of those investors that have your Roth IRA on the self-managed side of it for you as a single person or for you and your spouse, and you're not maxing those accounts out at 11,000, guys, you don't need to be talking about starting a Scott Trade account or a brokerage account and just start trading stock, okay? The last thing I want to talk about is all too often the hint that I get from watching other stations online about offering their stock picks, guys, they're not approaching investing in a calculated, careful manner. It's almost portrayed as a game that if you go ahead and just buy Amazon, you're going to make all kinds of money, okay? On the Independent Investor channel, and in my 24 years of experience in the market, I can tell you this. Anybody that's given you that type of an advice probably hasn't lived through a recession of, let's say, 40 or 50% of a drop in the market, all right? It's easy to make those recommendations after an 8-year bull run, all right? But if you do not approach investing like it's a war and you're looking to put your best soldiers on the field, or you're approaching it to put your best players at work, right? Or put your money to work in the very best assets that are out there, guys, if you're looking to play in stocks and investing, it's not for you, okay? It's really not. And I approach it like a war. The reason why I say that, and I don't like the analogy, but you have to approach it like you are willing to invest in an asset that you are willing to go into a 40% downturn and look to buy more, not panic, but look to buy more. And if you approach it in that particular manner, and you look to build those accounts using your index funds, okay, which are like mutual funds, my follow-on video is going to be a breakdown of ETFs and index funds. Very similar products, wonderful products, give you a little bit different approaches to the market. I actually own both of them in my portfolio for different reasons, that of which I'll explain later, but they both offer that diversification across the board within your portfolio, within your tax-protected portfolio, all right? So to own all three of these, and the final thing is to add those cornerstone stocks in there after you've went through the proper processes of starting the right accounts, all right, guys? I find that what I fear is that a lot of people are getting information online, and the folks that are pushing out this information, guys, are the same guys who are pushing out, information about how to make all kinds of money with fidget spinners. They were just recalled today, all right? And I think from, a responsibility perspective, I think a lot of those folks probably owe a lot of you guys an apology, all right? Because if you're just throwing information out there and you're expecting people to watch it, you have to expect that people that are watching your information are going to take action on that particular information. And all I'm saying for those folks that are putting out that information, own it. Own the information, all right? And, be cautious. Be cautious with the information that you take in for yourself and are willing to deploy in your own financial future, guys. It's that important. And following these 3 steps really are going to help you be more of a cautious, calculative investor going forward. I cannot stress that enough, guys. And I tend to be extremely careful, with the stock picks that I push out there, knowing full well that if I'm offering a stock, I expect that there's a potential that you could actually take action on that particular stock trade, all right? So guys, thank you so much for tuning in. I would love it if you could drop your comments into the bottom with regard to this cautious topic, because I really don't believe a lot of people online are taking this approach, all right? You can find all kinds of videos on a ton of different stock picks, And, very few folks are generating any type of cautious dialogue with regard to approaching the market. And I think when we shy away from those discussions with the market at all-time highs, I really think we're doing a potential disservice to the viewers that are tuning in to really get good, broad-based information. All right? Listen, guys, thank you so much. If you haven't subscribed to the channel, I encourage you to subscribe. You're going to be notified of any future videos. I post extremely regularly on a myriad of different topics out there, guys. There's a number of different topics that we need to talk about just to strengthen your own financial futures and your own financial education going forward, and I encourage you to do so. And if you have somebody out there that can benefit from the information, go ahead and tune them into the channel. Send me a direct comment. I'll be glad to direct comment to you guys. I hope you've taken this information to heart, and you've maybe you're willing to take a little bit more of a cautious approach to building out your guys' accounts and building out your guys' portfolios. And I look forward to being with you on follow-on videos, guys. Thank you so much for tuning in, and good luck in your financial futures.